Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracy Reinick, and this week I'm joined by Maddie Lowe. She's an account manager here at Zacks who has been on the show before. I think it was about the trading apps, millennials. We've covered the millennials and the trading apps. We're kind of over that now. We're done with the trading apps, but she was on a couple of years ago when it was kind of the new thing to be in. And I asked her on this time to discuss a topic I've wanted to talk about for also a couple of years on the podcast now, and that is women in particular and investing. And specifically, are women better investors than men? This rumor or theory has been out there floating around for a while now. And I'm not really talking about trading because there are a lot more men who trade, and anybody who's on like a StockTwits platform knows that it's basically dominated by men. But I'm talking about like actual investing, the long-term investing. And when I first asked Maddie to be on the show, she was immediately like, oh, well, I haven't looked at my account in a while, right? Like you were like, oh, well, Robinhood, that's right. But I feel like that is why women are better investors, because we do have the capabilities for whatever reason to just like put some money into certain stocks or ETFs or whatever, and then not really do much with it for quite some time. In fact, like even in my example, I put money into my 401k here at work at Zacks, and I don't know the last time I looked at it, but it's at least 2 years was the last time. And women tend to because they're not obsessing with it, they tend to ride out the ups and downs in the stock market better, and they don't panic when things turn bad. There's been a couple good articles out recently about women in investing, and one of the ones that I held on to was in Money Magazine, and it was from March of 2018. Now, unfortunately, Money Magazine no longer exists.
R.I.P.
It has left us. You can still get the articles online, however, and I don't know, are they putting content online? They might be, but just the actual print version is gone. But Women Investing was on the front cover of that issue, and it was called The Investing Gap. And it was by Sally Krawcheck, who's on the cover, and she operates Ellevest, which is about women investing, and she's trying to get more women to invest. And there was a couple good little tidbits in the article about how good women investors are. And one of the little tidbits was that studies have shown that when women finally do put money in, that they outperform men by about 1% a year in their returns. Now, you might think like, meh. Wow, that was like a shocker. My microphone just tipped over, but that's okay. We'll continue on. But you might think that was like timed perfectly right when I was going to like reveal something. But you might think that 1% a year doesn't really matter, but over the course of 10 years, 20 years, 30 years, that really adds up to quite a bit of outperformance. So that's nice to see. And I do think other studies have shown that over several decades, the article says that, women do outperform men. But the problem is women aren't getting in there at the same time as men. They're not investing at the same time, and they're not investing as much in stocks or like a little bit more aggressive investments. So the article also did talk about that in their portfolios, women held 71% in cash. That's a really high percentage.
Yeah, it's too high.
Men are even high. I was kind of surprised at this. Men are at 60. So that's even really high, but it's not, you're not going to get the super huge portfolio with it sitting there in cash. So that's something that does need to be worked on. I was looking up a couple of the kind of inspirational women investor stories to prepare for this podcast. And there was one from last year from 2018, and it was about a legal secretary in New York City, Sylvia Bloom. And she worked for the same New York City law firm for 7 decades. And she basically just started buying stocks when her boss bought stocks. Like she handled back then, the legal secretaries did everything. They like paid their boss's bills. They got the dry cleaning. And maybe she, obviously maybe was handling the trades. Like he would say, go buy this or call my broker and buy this. So she would buy too, just in a smaller amount than what the partner was buying. And she apparently never told her husband, they don't think. He was a firefighter. And then he went on to do some other jobs too, even after he retired from firefighting. But when she died at 96, this was in 2016 is when she died. She had 3 broker accounts through 11 bank accounts and 3 brokers. And she left $9 million.
Wow.
Yeah. So I like hearing these stories because it's definitely doable for just anybody to accumulate. Now, you don't have to necessarily set a goal of like, oh, I want the 9 million, but it's easier to set, the smaller goals, like the 100,000 to get to first. And then, maybe you could have that $1 million goal out there. That's definitely doable for many investors, especially millennials who are young enough where really compounding is the big difference. And I don't know if, do people in your generation, do you think that way of like the compoundingness of it, or are you investing mainly just for fun, or to try to maybe raise money for some kind of experience like a trip, or I don't know, a big event like a wedding or something like that?
I would say amongst friends I have that are my age, my female friends tend to want to invest for the long term.
Okay.
Yeah, they're thinking about where they're going to be in 10 years, if their job is going to be the same job or if they're planning a career change. I'd say my male friends are more interested in that short-term investing strategy. Yeah, just the game of it, for lack of a better word.
Now, do you ever have any discussions with them? Do you ever like trade like stock tips at all with your friends?
Not so much. No.
Okay. I don't either, really.
Yeah, it's we more talk about, I guess, like more about the reason to invest in a company rather than tips.
Okay.
Yeah.
So what does that entail? Like, what are the hot ones that you might talk about now amongst your friends?
Yeah, I would say my friends are pretty like ethics minded. Like we want sustainable investments in kind of every sense of the word.
Yeah.
And I think we are excited about companies that are female owned and managed.
Okay.
Yeah.
That's a big thing now. There's whole ETFs, which I'm going to cover on another podcast, that are devoted to women in management of some kind. And they used to run a mutual fund even back into the 1990s that was women like on the board and all of that. And I'm not sure if that one still exists.
Well, Ellevest now has a fund. It's I think PXWEX, Ellevest Women's Fund. And yeah, it tracks companies that are women owned, managed, or committed in their mission towards gender equity.
What do you think about investing in, quote unquote, women stocks? Not the ones where they're just like in management or something, but women focused areas, I guess I could say. So like the stocks like that do beauty, like Ulta, or a lot of the retail stocks that are more female oriented, like a Lululemon, although the men's business there is booming and that's going to really drive them going forward. But every time I'm on StockTwits, it's always like, oh, those women in their yoga pants. But do you think that, I know, do you think that women can find good investing ideas, though, focusing on some areas that are considered to be like women's investing?
I would say yes. For certain types of investors, you look at a company that you actually interact with besides buying and selling their shares. Like Ulta, women go to Ulta, buy makeup, buy products. So it makes sense to start, if you're new to investing, to start looking at companies that you actually already have that relationship with, that you would trust and have a stake in as an investor. I think that makes a lot of sense.
Yeah, I own Ulta and Lulu. I just bought Lulu though, so we'll see how that one turns out. But I've owned Ulta for numerous years, and I have bought them because I feel like I do understand their business, and so that was easy for me. I still own some kind of male dominated type of ones, some tech companies and stuff that would be considered more male, I guess, if you want to call it that. But I don't really see that there is any difference. Like when I'm investing, I invest for the company and its earnings and its future growth potential. So I don't know, like, some people tend to put them in these categories, but I don't think that does anybody any favors, really.
No, not necessarily. I think sometimes making a gender distinction is only useful to people trying to discriminate.
Yeah.
So yeah, if you're looking at performance and earnings, it really shouldn't matter. You're right.
Right. Okay. What about investing in like social media stocks and things like that? Like women tend to dominate on use of those. They're not really dominating in terms of running them, I'm afraid to say.
No.
Although there are some women like Sheryl Sandberg at the top of some of them. But what do you think? What do millennials and your friends think about investing in the social media? Are those still hot? They used to be like 5 years ago.
Right. I think that it was kind of like that .com boom.
Yeah.
I would say it's kind of like swimming in a water temperature that like just feels like the air outside. Like at this point, they're just so ubiquitous that I think people are starting to get distracted maybe and forget that these are really viable investment options.
Yeah. Facebook owns Instagram. So a lot of people love Instagram and don't realize, although I'm kind of surprised if they don't realize yet that Facebook owns it. So if you want to own Instagram, you have to buy Facebook. Also similarly, although I don't feel like anybody is like, I must own LinkedIn, but Microsoft, I don't know why that is, but Microsoft owns LinkedIn. So that's a way you can own some of these kind of social media companies without actually, Twitter is Twitter. So you're just going to buy that one, obviously. Okay. So what about like the longer term investing outlook? Do you trust yourself? Do your friends trust themselves to invest for the long term? Because a lot of the women I talk to feel like they aren't sure on buying a company that they may want to own for 10 or 20 years. And so they kind of reluctantly invest, or they just don't trust kind of their instincts on some of the longer term outlook. Do you see that at all? What's your take on like, thinking a lot longer term?
For the long term. Yeah, I would say unfortunately it's a pretty common thing the more I talk to people that women tend not to trust their instincts when really their instincts are quite good.
Right.
And I think that learning to go around that in yourself, I think can make everyone a better investor. I'm really lucky because my mom's an accountant.
Okay.
So I was raised with a really strong sense of financial literacy in my household.
Yeah.
She did the finances for our family. And I have a younger sister, so there was never like a gender gap in the way I was raised compared to a sibling, for example.
Yeah.
So I feel really fortunate to have always had like a strong financial head.
Yeah, that is good.
And she worked with me to talk about long-term investments and starting young. So I feel prepared in a way that I think a lot of my peers don't right now as far as making long-term investment decisions. I read somewhere that women are not necessarily risk averse, but they're risk aware.
Okay.
So
what does that mean?
So rather than not taking a risk because you're aware of the potential downside of the risk, you're just more cautious about entering that risk, which I think is a very good thing. And, it's a survival skill.
Yeah.
And it's something that applies to all aspects of life. But as far as investing, I think people, I feel lukewarm about taking a risky investment sometimes.
Okay.
But yeah, so my long-term portfolio right now is mostly funds, mostly money market.
Okay.
Low risk, but long-term.
Yeah. I wonder if that translates to individual stock investing as well. Like if there's just simply more men in, say, a recent IPO that launched, or companies that don't have earnings, or those kinds of things. I haven't seen the studies. I'm sure someone's looking at it versus, all these platforms have the data now for the most part. They know what the men are buying versus what the women are buying
That's
on
so
there.
Fascinating.
Yeah. So I would like to know, this is like a mind over money type question for Kevin Cook, who does a lot of podcasts on this kind of issue.
Yeah.
About whether or not, they go into different things. I'm assuming yes.
I'm assuming
actually.
yes.
Yeah.
Yeah. I've been thinking a lot about like stock market investing, and what I love about what Zacks has to offer is that it's very democratic. Like anyone can use the platform.
Right.
But we have all these, demographic kind of silos for different types of investing. And if it was more democratized, if like the stock market IPO investing was more diverse in terms of gender, age, income, background, I think stock prices would be probably more stable and better reflect like the actual value of the company, rather than the actual value a certain silo of people assigned to it because of what they heard on the news that day.
Yeah. And the computers, don't forget about them, because they're really messing around in a lot of these stocks now, unfortunately. So, and they just do their own thing. But no, that is a good point. Yeah. And I noticed when I was researching a lot of these long-term investing women who then left, millions of dollars behind, that they mainly did invest in kind of, I wouldn't call it conservative, but kind of conservative, like companies that paid dividends, that, gave out income every year, that weren't in like new startup industries. But some of that also may just happen to be like the time frame of when they were investing. Although some of them were investing in a lot of the medical type of companies, like the drug stocks and things like that. So that's a little riskier, because you never know whether or not they're going to find that drug, or, things go off patent, all this other stuff happens. But I noticed that it's not, you don't see, at least by the time they die, and then their portfolio becomes known. And sometimes all their portfolio isn't known, which I'm always mad about. Like, to the reporters out there, if you're covering these stories, try to find out what they were invested in, for goodness sakes. Like, we all want to know.
And the other side of it is we probably aren't seeing the stories of women who lost everything.
Right.
Like, that's not going to get reported on.
Right.
So yeah, it'd be good to see both sides of what did pay off over decades and decades and what didn't.
Right. Yeah. I don't think it would be as inspirational if we
Right.
But if you just keep in like a more conservative stock portfolio over decades, you haven't done poorly, as long as you're not market timing it, which is where I think women get their better returns. Is from, they don't panic when we had like 2008, 2009. They would tend to stay in versus getting out, which a lot of men did. And then I feel like, can ride out these ups and downs so much better. And if you're in stocks over the much longer term, like decades and decades, the volatility really flattens out. It just isn't that volatile if you've owned all those years. Like, for instance, my grandmother owned ExxonMobil starting from the early 1970s. It was like 1971. She inherited some shares from her dad, and then she just basically never sold any. She sold a small percentage to like get her portfolio more in line, but she owned those, well, let me think, at least over 40 years in there. And all the ups and downs, Exxon had some huge sell-offs amongst all those decades, and some years where it was awful, like year after year, but she kept getting the dividend and like reinvesting that dividend. So over the span of 40 plus years, it turned out okay for her. Now, one of the downsides to that kind of investing is that all investors, not just women, but all investors should be paying attention to like what's happening with their stock and that company. So my grandma got kind of lucky that she was in Exxon, which still exists and is still, earning money, but plenty of companies no longer exist that did for even like 40 or 50 years. And they, run into technological advances or their product suddenly is no longer needed. Think like, if you were a blacksmith back in the day, it got real rough for you, later on.
That
So
pesky industrial revolution.
yes. So that is something to keep in mind too. Like we hear these stories, but usually these women investors have more than one stock, obviously. And then some work out and some don't, but the ones that do are the ones that drive the portfolio because you can get these big winners. Okay. Like, are there any other like issues, like concerns just on women in investing? I don't know. I'm hopeful that more women will be investing now because they're being exposed to Robinhood and these super easy ways to invest now. And now that a lot of the online brokers are going to basically free trading over there too. You can set up an account with a super small amount of money. I've always said this, like a lot of them don't need a lot of cash to go in there.
Right.
And you can even add like small amounts to a lot of these, although they did get rid of my favorite share builder plan now. I'm still crying about my share builder going away. That I could do like $25 and it would buy randomly. I feel like women like the share builder more too, but it would buy, you could set it up to buy on any Tuesday at 10 a.m., like whatever you're buying. So you're not really trading it. And so you don't know what the price is going to be when it goes to buy it. And I could literally buy like $100 of whatever stock and it would buy like 1.2 shares or whatever. And I kind of got mocked a lot by some of my coworkers when I originally started doing it out in Silicon Valley. Around the .com eras when those plans like launched, and it seemed like, oh, that's so small, that little amount you're putting in, but it adds up. All these small amounts do add up because in these stories of these women who were investing for 30, 40, 50 years, they didn't start off with a large amount of money either. And it's just these little bit investing over and over the course of numerous years that add up, and then you get the dividend.
Yeah. What appeals to me about that strategy is you're acknowledging that the risk exists, so you're risk aware.
Yes.
But you're not averse to the risk because you're saying, I accept it, whatever it's going to be every Tuesday for the next X number of weeks.
Right.
It's like combining the best of both worlds in that way.
Yeah. So hear that, anyone out there? Bring back the share builder. It was so good, but no, it's gone away now. I've tried to kind of recreate it, but you can't because nobody is really offering that like every Tuesday thing anymore. So all I can do is just kind of buy on my own like every Tuesday. It's kind of a drag. It's not as like automatic. So yeah, it's a drag.
But back to the other things to talk about women investing. I think what Ellevest, in my experience reading their stuff, has done really well is make it clear how holistic women and money and investing is. Like the barriers to entry, like it goes through, things like student debt, which is a fairly recent generational thing.
Yes.
The gender pay gap, which is still very much a thing that often doesn't get talked about in workplaces, especially. Women being unwilling to enter, even though they might be qualified enough, even if they don't think they are.
Yeah.
So I really like that they tackle investing from all those different points that are specific to women investors, maybe.
Yeah, I feel like some women, they're not confident going in there, and they really should be.
Yeah, and they make it seem important. They make it seem like a fundamental thing that women should talk about investing.
Yeah.
Often that's the first step to getting where you're trying to go, is like being willing to talk about it, especially with other women. Because if you don't have the representation, you're not going to, first of all, see yourself doing like you said, like you're not going to see yourself making $9 million if you don't know that someone did that one time.
Right.
But then it also translates into really real things. Like I saw that a lot of algorithms used by financial, like wealth management people, is that the algorithms they use to calculate, okay, your salary over the next 30 years, let's extrapolate that to what you could save or earn on the
Yeah.
investment, those are often based on male statistics
Oh.
about men.
So they
And-
don't account for like women leaving the workforce for a few years to raise their
Exactly.
kids
Way
and
more
all
common
that
for
stuff.
women,
Yeah.
gender pay gap, all those
Yeah.
things. So without that visibility, without seeing yourself in that position of being able to invest, you're going to be subject to this algorithm that's not based on anything true about you.
Right. Okay. Well, I'm hopeful that some of that is beginning to change now.
Yeah.
And I do think that even in Gen X, that there's a certain group of women investors. I know even back in the 90s, a lot of my friends were in these like women investing clubs. And those kind of went away over the years, but they managed to stay in them for quite some time. And that was also a good way to get kind of like, used to investing. They were super small amounts back then because we were all in our 20s. And so there wasn't a lot of money to go around, but it was the sharing of ideas of like, oh, what should we buy? Because it was a club. So all the money was like pooled in there. But that's also interesting to me because that's a way that you can get over some of the risk, the worries about the risk is like through a club or something like that. But now I feel like Gen X women have graduated from that and they are running their own accounts on these various financial platforms. And I'm excited to kind of see how that develops as the Gen X heads towards retirement here. Oh, retirement. To see if all those years are paying off for the women investors and the men along the way. But now with millennials and Gen Zs, and it's so easy to invest. I feel like this really needs to be, hit on hard. Do they teach any of this at schools at all? Have you ever taken like a class through either like your high school or college or anything?
Yeah,
they
our
offer
home
that?
economics class in high school definitely offered some personal finance.
Okay, wow.
Very basic, but I would say I had an amazing cheerleader and coach in my mom.
Yeah, it was your mom.
Who was my main source of financial information growing up. Yeah.
Okay, well that's good too because I feel like that will trickle down as the more women invest, then it will get easier for the next generations because as you said, they already are seeing someone who's invested and it won't be a strange thing to them at all. All right. So this has been a good discussion. Women are better investors. The stats do show it.
That's right, Tracy.
I'm just going to put it out there, but they have to actually be invested. And it can't just be in cash. So get out of those cash positions, get into some stocks or ETFs or mutual funds, whatever you feel comfortable getting into. Hire a financial advisor, whatever you need to do. Start an investment club, that kind of thing. That could be a cool thing to do. Maybe we'll bring them back, investment clubs. Those are fun. But whatever you do, get in the game because this legal secretary in New York would not, have left $9 million, and she left it mostly to charities, actually, which is nice too. And she funded some scholarships at the local college as well with that money. So, there's a lot of opportunity out there. Don't miss out. Okay, we talked about a couple of different stocks and things on today's show. There were really no like recommendations. We were just like discussing some of them. So we did talk about Ulta, ULTA, and Lululemon is out there, LULU. We didn't talk about Weight Watchers. That's considered to be another like female stock. I don't know, maybe because women run it. There is a woman CEO and then there's Oprah. But those shares, if you were in it, have been doing pretty nice lately. WW is now the ticker because they're focusing on wellness over there. WW. If you're interested in social media, of course, there's Facebook owns Instagram. So if you're spending hours a day, as many of us do on the Instagram, you might want to check out that one. Microsoft owns LinkedIn. And then actually Pinterest has been one of the better performing IPOs recently too. And yes, I would say that's like a female centric stock, give it whatever you want to call it, but that's okay. There's a lot you could be investing in if you just kind of want to go with what you know. And if that's an easy way for you to do it in the beginning, then that's what I recommend. Just go for what you know. That's what I've done. Although I do have to reveal, and I've revealed this on the podcast before, The second stock I ever bought, well, the first one was an airline. Don't ask. Like I didn't even like to fly, but I did make money off it. So then I got real confident. And this was when I was like a teenager. And so then my second stock, I don't know why, but I bought Kmart. Instead of buying Walmart, which was like the number one in the industry at the time, I went with the number two, which is dumb, but I did. And I didn't even shop at the Kmart. So I learned a lot of lessons when I lost money owning that for numerous years. I didn't hold it all the way until, it went like wherever it went. But if I would have owned Walmart, I could have been on with some of these stories of the millions of dollars with my little investment in that one. But yeah, you know your instincts, you know what products and places and things you use and go to. So stick with some of the things you know, and I think that will serve you well. And as always, you want to subscribe to the podcast here, because we're bringing it every week with some stock ideas. So you can do that on Apple Podcasts and we're on Spotify and we're on SoundCloud. And if you're just kind of interested in what's going on at Zacks and what kind of information we have here, because we do have a lot of information, we're running a special promotion for all of you that are listening to the podcast. You can get it at Zacks.com/promo, PROMO, and it's Zacks, ZACKS.com/promo. And this is for our ultimate. It only costs $1, and you can go and check out all of our portfolios here. And we run a lot. So, if you just want some stock ideas and all of that, I run the value investor and the insider trader portfolio, which is both of those are in the ultimate. We also have like the marijuana innovator and a whole bunch of other ones, healthcare and large caps. It's a good mix, plus the dividends if you're interested in those. But you can try it out for 30 days for only $1 at Zacks.com/promo. Just go over there. And as always, I'll see you again next week with some more stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.